All right. Hi, everyone. I'm here with Asma Hoque. She is a CPA who serves clients all across the country, and she's been working with me and a number of our Twin Peaks clients for several years now. Asma, thanks so much for being here.
Of course, thank you so much for having me, Tushar. I'm really excited.
Great. Yeah, Asma. Well, you know how we run these things. We like to get right to the point, and we're glad to have such an esteemed accountant here speaking with all of our clients. As a wealth management advisor, I often encounter questions about tax planning and financial management more generally. But how does an accountant like you, who specifically supports technology professionals in managing their finances and taxes, how do you kind of specifically provide that support to tech professionals?
Definitely. So the key here is really tax planning. So tech professionals, they have stock options. There's tax applications there. So a lot of the time they get surprised with the tax bill in April. So we definitely want to meet with them ahead of time, earlier in the year, to give them a closer look at, hey, how much am I going to owe in April? What can I do before that time to reduce this liability? So I do recommend you hand in hand a CPA with a financial advisor and kind of like highlighting, oh, you have some capital losses that maybe we can harvest some of your capital gains, or you're not maximizing your 401k contribution. Let's increase that within the next couple of months before the year end closes.
Yeah, and tell me a little bit about that because I think not everyone fully understands the difference between tax filing and tax planning. So can you speak to what tax planning is?
Yeah, of course. So tax preparation is very straightforward, where the year has already closed. Hey, here's my tax documents. They literally just prepare your taxes and they'll tell you, hey, this is how much you owe. Versus tax planning is a lot more proactive. We kind of prepare a draft of your tax return within the year of. So, for example, if we're doing tax planning for 2024, we're going to give you a projection of 2024 now. We're going to tell you, hey, this is how much you are projected to owe in April of 2025. This is the wiggle room we have. Like, so sometimes people have a side business. We're like, okay, let's start maximizing some more expenses here. Or like I mentioned, let's fully contribute to your 401k this year. This is how much money you can save by fully contributing to the pre-tax 401k.
Got it. Yeah, that's really helpful for all of our listeners too. What I do, Asma helps me with my taxes, and I sit down with her in November of each year, and she takes me through a tax projection for the calendar year, and it's really helpful because I now have 4 to 5 months worth of runway, especially if I'm going to have a large tax bill. I now have time to prepare for that. If I need to sell some stock to raise the money for taxes, I have time to do that. Or if I simply want to just set aside some money for my income over the next few months, I've got time, so I'm able to be proactive about that rather than reactive. And I've been telling, based on our conversations, I've been telling my clients, if you're getting a surprise tax bill, you're doing it wrong. So you really need to get ahead of that. What would you say are some common tax considerations unique to tech employees, and how can you help them navigate these complexities?
So unique to tech employees, a lot of them do have stock option compensation. I really like partnering with my clients, and I kind of teach them like, hey, this is how your RSUs are taxed. This is how your ISOs are taxed. So just so they can have like an advantage ahead of time, like, okay, I know what's happening with my stock options and I know how it's getting taxed. I know what the holding periods are and so forth. So I do have some clients where they're like, oh, I didn't know that I was going to have AMT tax on these ISO exercises, or I didn't know that if I sold them too early that they would get disqualified, and now I have ordinary tax on this. So we kind of like hold your hand and kind of teach you, hey, this is how it's going to work. This is probably the best bet. If you do have ISOs, let's hold it and meet the holding requirements and so forth.
Got it. Yeah, and I see the withholding question is popping up with me and a lot of my clients right now because people are starting to get their surprise tax bills, and I've started to educate them about the 22% versus 37% withholding that they can opt into. And anecdotally, what I noticed was from like 2018 through maybe 2021, many people who had the lower tax withholding on their RSUs, they were sort of fine with it because the stock market was only going up during that time. And so it made sense to hang on to your shares and pay a lower tax and then kind of pay that tax out of pocket. Then all of a sudden, as you and I, know this well, 2022 happened and the stock market kind of fell apart, and people started to change their view on how much they should actually withhold on their RSUs because they were left holding the bag and holding stocks that were down. So I certainly see the value in having someone like you to remind them, perhaps more often than I will on, hey, just remember you might be getting a surprise tax bill and there are some risks associated with having a lower withholding percentage.
Right, exactly. And a lot of people are sometimes they're even surprised that, hey, I'm withholding only 22%. How come the company doesn't know that I'm in a different tax bracket? But that's because they're kind of leaving it up to you to let them know, hey, I want to withhold more. So that's
Got
definitely the conversation that you need to have.
got it. Yeah. And for some of our listeners who are holding stock options or have incentive stock options, they're of course subject to potential AMT taxes there. Can you speak a little bit about that as well as providing some color on what AMT credit carry forward is?
Yeah, of course. So ISOs, that's an incentive stock option, right? So a lot of people do see that there's a lot more benefit to exercising ISOs, and that is because it's not subject to ordinary income tax, it's subject to AMT tax. So luckily, you can exercise a certain amount of ISOs and actually fall under the AMT, where you're not paying any taxes at all during your exercise. So that's another thing that you might want to partner with your CPA to see, hey, how much can I exercise to not be subject to any tax at all? And then depending on how much income you have, you might fall into alternative minimum tax. So this is an additional layer of tax that you might be subject to depending on how much you exercise and depending on the fair market value. It's a whole picture. So it's depending on everything that's your full package of your tax return. But these taxes that you pay, you're kind of prepaying these taxes to the IRS, and these it carry forwards to the future. So you will have in future years, you'll have credit for prior year minimum tax. So this does carry forward to future years. It really depends on your tax situation year over year to see how much credits you can receive back. So I do have some clients where it takes them 5 years to redeem all their credits back, or some people they get all their credit back within one tax year. So that is really interesting to note because you might have to prepay a lot of taxes and then you're not really sure when you could get those credits back. That's the complexity of it.
Got it. Yeah.
Yeah.
And I've had the pleasure of working with you on several of our clients who, are at startups and have ISOs. And, it's been tremendously helpful to see you do that modeling real time for my clients so they can see and really understand the taxation of their stock options. In those, IPO type scenarios, there's so much at stake that I think having a clear understanding can empower you to make decisions that could, very meaningfully change your outcomes financially.
Right, exactly.
Yeah. But beyond basic tax preparation, what additional services or guidance can tech employees expect from when working with you?
So definitely, it's going to be a highlight of our conversation is tax projections. So we do have clients where they're like, okay, if I sell this many shares, how much tax am I going to owe? So they really like building different scenarios and seeing the difference in the tax liability. It allows them to decide like, okay, this is what I'm going to roll with. This is my plan for the year, as opposed to just doing it and then seeing the tax implication later. So I think going hand in hand with aligning to what your plan is and seeing the tax liability with that is key.
Got it. And for your clients that you're doing tax planning for, do they also have the ability to, kind of email you one-off questions or set up calls as needed about things that may come up throughout the year?
Yes, of course. So I do offer like a full package service where we do tax preparation, tax planning, and that does also include one-off questions throughout the year. Say we did do a tax plan. Oh, can you update my case? The fair market value of the stock increased to this amount. I just want to see this case updated to the new fair market value. That's a very quick update. I can go ahead and share that with our clients right away.
Got it. Okay, very helpful. Are there any other proactive strategies that tech employees can implement to optimize their tax situation? Particularly given the dynamic nature of the tech industry. I know you've talked a little bit about tax projections and option planning, but is there anything else?
Yeah, so a lot of these tech employees, they're breadwinners, so they oftentimes phase out of being able to contribute to a Roth. So there is other options like a mega backdoor Roth option, and then also just kind of highlighting like capital loss carryovers that you can, so your CPA can share this with your financial advisor as well, just letting them know like, hey, my client here, our client here has $100,000 capital loss carryover. Is this a good year to harvest some of these gains and have tax savings? Because essentially it's almost tax-free capital gains because you have carry forwards from previous years.
Got it. Yeah, and I've helped a number of clients with the mega backdoor Roth strategy, and that's something that most people who have 401ks may not even know that that's an option for them inside of their 401k plan. For anyone who's listening to this and doesn't know what I'm talking about, your 401k plan through your employer may have a bucket called an after tax bucket. This is different from your Roth bucket that allows you to put more money away post-tax for retirement within that plan. And if you convert that money to a Roth account, it actually makes those dollars tax-free forever. So it's a very unique and powerful planning tool. Working with someone like Asma, she can make sure that any maneuvers you make in that plan get properly reported on the tax return, so that you're taking the full benefit of that strategy.
Mhm.
Asma, could you talk a little bit about, since we're on this topic of 401ks and mega backdoor Roth, can you, I guess, discuss the role of retirement planning within the context of tax management for tech professionals, and how you might be able to assist in this area?
For rollovers?
Yeah, or just retirement planning in general. How do you kind of view the tax component or the planning side of what you do, as it relates to retirement planning?
Yeah, definitely. So, a good thing about tax planning is that we are able to look at your pay stub and see, okay, how much have you contributed to a 401k? How much more wiggle room do you have to max this out? As well as an additional scenario. So we have clients where they're like, okay, I think I need to pull out money from my retirement plan. How much tax am I going to owe? So this really helps because it's a combination of, hey, what is my tax situation for the year layered on top of your distributions that you may have. So depending on your tax bracket, this can vary. So sometimes it's honestly a better situation to know exactly how much you're going to owe versus just pulling the funds and then finding out in April.
Got it. Yeah, makes sense. So Asma, I'm going to pivot a little bit. I know we've talked a lot about people who work at large tech companies, but one trend that I'm seeing is that with the rise of remote work and freelancing, particularly in the tech sector, are there tax obligations or tax just general topics that people should be aware of if they're thinking about going the consulting route or freelancing route, and what are some common things that someone should be thinking about there?
Yeah, definitely. So when you do have some consulting work or 1099 that you're receiving, there's a lot more strategy availability and strategy because you can do like an office and home write-off. You can do business vehicle mileage. You can write off like say you set up your office and home, you bought a desk, you bought a computer, you bought a laptop. So all of these things you can expense against this income that you earn because you had to buy these things to be able to do your consulting work. And then it also opens up leeway for a self-employed pension plan as well. So based on 20% of your net income, you could put some additional money away to your retirement.
Got it. Yeah. And so for anyone listening, even if you are someone who has a W-2 income, if you're doing any 1099 work or consulting work on the side, all of these same principles will apply to that side of your income, right? So it gives you the ability to take deductions against that income. Maybe you can't do it against your W-2, but you do have, this other stream of income that you can, do all of this planning around. I found it particularly helpful to work with Asma because I'm a business owner and have the ability to do write-offs. So having Asma by my side to make sure that I'm taking all the appropriate deductions and not leaving money on the table has been tremendously helpful. Asma, to your point on SEP contributions, so for anyone listening who hasn't heard of the term SEP IRA, that's really like a retirement plan that you can set up for yourself as a self-employed individual. It's kind of like your personal 401k, if you will, and it also allows you to defer money pre-tax. So that's worth considering, especially if you have some considerable self-employment income. It's a decent way to offset some of that liability.
Right, exactly. And it's really good to know as well, like depending on your 1099 income, if you're over a certain amount of profits, it might be a good idea. Okay, let's incorporate you as an S corporation because your 1099 income, you're considered self-employed, so you're subject to self-employment tax. So this is an additional layer of tax that once you're making a certain amount of income, we can decide when it's a good time to incorporate your business or make the S election and additional strategies around that as well.
Cool. That's a particularly helpful exercise too. If you're not sure whether you should go the S corp route or just stay as a 1099, Asma has a model that she can build that will show you the impact of each of those decisions, and it's a pretty cool real-time model that kind of shows you the appropriate path forward. Asma, if we can just kind of pivot back to tech, kind of more traditional tech employees, are there any commonly overlooked deductions or credits that tech employees should be aware of, and how can you help them maximize their tax savings there?
Definitely. There's one very simple one that I honestly see overlooked a lot of the time because a lot of our clients, they do own a home or they do, I mean, of course, they own a home, they pay property taxes, they're just above itemizing their deductions. So then there's a lot, now that they're itemizing, they can start saving dollar per dollar on their itemized, right? So they're, so donations, that's the big one, donations. I have a lot of clients, they make a lot of income, they have they're itemizing deductions, they have no donations at all. So that's one thing where I think that they potentially do have donations, they just haven't asked for receipts. So maybe you go to the church or the temple, they don't give you actual receipts. You can actually ask them like, hey, do you guys provide these receipts? Or we can estimate, or you can kind of keep a log of how much you've actually contributed there. Because you don't have to provide receipts up front. It's only if it gets questioned, you would have to provide a receipt. And aside from cash donations, there's also goodwill that honestly gets overlooked. So throughout the year, a lot of our clients make goodwill donations and they're like, well, the receipt they provided me is blank. So we notice goodwill, they provide blank receipts. You kind of have to fill it out yourself and put a description of what exactly you donated. So you can work with your accountant there to see, hey, what exactly should I report for this?
Understood. Okay, very helpful. Yeah, I can't tell you how many times I forget to even take the receipt with me. So,
Right.
yeah. I mean, it sounds like there's a lot that you need to know, whether it's stock options, RSUs, donations, et cetera. How do you kind of stay up to date on the latest tax laws and regulations relevant to the tech industry?
Yeah, so honestly, I do annual tax update seminars. These are 2 to 3 day seminars. So every year we find out any tax updates, any changes in rule, or any rules that are kind of phasing out. So, hey, I want to let my clients know, hey, this advantage is phasing out in the next year. Let's take advantage of it now. And aside from that, CPAs are required to have 80 hours of continuing education in every 2 years. So that allows me to, it kind of keeps you on track. Like, okay, let's do some more continuing education. And of course, I like picking topics that go hand in hand with my clients and the clients that I work with.
Got it. And finally, just what if you had to give one piece of advice to anyone watching this video or listening to it, what's one piece of advice that you would offer to tech employees who are really looking to establish a strong tax foundations for themselves and optimize their tax planning strategy?
I would recommend getting to the habit of doing tax projection and just finding yourself a good accountant that you align with and someone that will help you. So I have too many clients where they just have an accountant that's just like, I see them once a year. We don't keep in touch. They don't really know about my lifestyle. I actually have one example recently is I have a client, I kind of got to know her more. So just knowing that I knew how much she helps her family and how much she contributes to taking care of her parents. So then I realized I'm like, wait, you should be claiming head of household. You fully take care of your parents. They should be your dependents. And honestly, I saved her thousands of dollars. She had a really beautiful refund this year, and it's all because of her change in status of filing.
Got it. Yeah, that's really helpful. I mean, I personally too, now having gone through a tax projection 2 or 3 times with you, I can say with confidence that's probably the most valuable exercise we do on the tax side each year because it just gives me the ability to make some tweaks and or just be reminded of certain things I need to do before the end of the year so I can actually change my outcome a little bit. I see too many people trying to, offset their 2023 tax liabilities by maneuvers in 2024, and that's unfortunately not how this game works. So, yeah. Asma, if anyone wants to work with you or just ask you some questions, how can people get in touch with you?
They can email me at asmahokecpa@gmail.com. So it's ASMAHOQUE CPA@gmail.com. And then I also have a website for my company. It's called Workwise CPAs. So it's workwisecpas.com.
Perfect. Thank you so much, Asma. And I'll, of course, continue to introduce you to people over email. If anyone here would like an introduction to Asma, just let me know. I'm more than happy to connect you. Thanks so much.
Thank you so much. I appreciate your time. Bye.